it's somewhere between 2026 and 2030 is where we think that $1 million from $40,000. I don't think people believed me when I said it on stage, Get Bitcoin 2022, but I meant it, and many people think, okay, so you're assuming that institutional investors become huge holders of Bitcoin. No, we're not. We're assuming, though, that they will move in gradually, and by the time we hit $1 million plus, they will have a 2.5% exposure to Bitcoin.
Cathie Wood, the founder of ARK Investment Management, continues to urge people to buy more Bitcoin now, while it is still around $40,000, as she believes Bitcoin is a great asset that has the potential to thrive well in the near future. While speaking in an interview with Yahoo Finance, the renowned innovative thinker predicts that Bitcoin will hit $1 million per coin between 2026 and 2030. She explains Bitcoin is the greatest monetary technology to ever exist. She also describes it as the first global big idea, private, digital, and rule-based monetary system with great stock value. Wood adds that the crypto asset will soon become legal means of exchange across the world, which will give it a big boost in price. We will now take you to Wood's interview, but before we do, don't forget to hit the like button and drop your comments about the interview in the comments section below. Thanks, and enjoy the video.
That is such a small allocation.
Yeah.
I think they will regret not having more because, as I mentioned, this is the first, each word I'm about to say is really important. The first global, big idea, private, meaning not overseen by any government, digital, rules-based monetary system. It is a big idea, and my mentor, Art Laffer, when he was collaborating with us on our first white paper in 2015 on Bitcoin, he said, this is what I've been looking for, a rules-based monetary policy. It might not be the right rule, but it's a step in the right direction. And of course, he means by that it's a great store of value, because it's mathematically metered to stop at 21 million units, so that's a quantity rule. So great store of value, scarcity meaning, but not a great means of exchange, right? That would mean a flat price rule. But we think over time, even that will, thanks to the Lightning Network, become more of a means of exchange and a unit of account, playing all three roles of money. And just to top this off, when Art and I and Chris Berniski at the time, our analysts, were collaborating, I remember saying, Art, how big could this be? This is amazing. And he said, well, how big is the U.S. monetary base? And back then it was $4.5 trillion, and Bitcoin was $6 billion in market cap. Today it's $800 billion. He said, well, $4.5 trillion. Today, that number is $9 trillion. So, it's a very big idea.
Reminiscing about the mistakes she has made and lessons she has learned in her 45 years of experience as an entrepreneur, Wood comments on how to reduce mistakes while investing or running a business by always taking calculated risks, cutting out losses, and moving on. She warns business owners that the heart and soul of every business is the people. Hence, they should be careful about the share of ownership they give out to entice more investors, and also make sure they diligently create suitable vesting periods for their employees.
The heart and soul of the business is people. And I think in the early days, and this is for people who are starting companies up, founders of companies, I think every founder makes this mistake, and I tried to limit this particular mistake because I heard so many people talking about it. Be careful about the share of ownership that you give away to attract people. Be very careful. Make sure there's vesting involved. I made a few mistakes, not many, because I had talked to so many founders and said, if you could change anything, what would that be? And so I've been very careful with that. We're employee-owned. And have one minority owner, Nikko Asset Management, in Japan. So I think the people is always the answer to that question. You make mistakes, and then you have to move on and make sure to cut losses as well.
And what about from an investment perspective?
The biggest mistake let me just explain something or elaborate on something I said earlier. During risk-off periods, we cut the number of names in our portfolio, concentrate to our highest conviction names because we know there are mistakes in the portfolio. This particular strategy came out of making many mistakes in the past. And so whenever we go into a risk-off period, I say to all our analysts and to Brett Winton, our director of research, I say, okay, now is the time. We have doubts, and they are reflected in our scoring, but are they reflected strongly enough? Which names are we going to consolidate into? And the important other side of that is, which names are we going to consolidate out of? So I think doing that aggressively, we shall see. If we have concentrated towards names that really aren't truly disruptive, and we find that our research was faulty, okay, then that will have been a big mistake. But and in terms of the rest of our tenure, what happens when we sell stocks because, we've made a mistake? We try and remember, when we cut a score like that for management changes, let's have heightened sensitivity to the next management change because we should have sold the stock when there was that management change. And I know that there are names that we did sell for that reason, or that we did not sell for that reason, and those would have been some of the biggest mistakes. But, I've been in the business now for 45 years, and so I've tried to bring to ARC all of the lessons learned, and I've learned a lot of lessons. I've made a lot of mistakes over time. I'm not saying we don't make mistakes. I'm saying there are mistakes in the portfolio. If there aren't, then we're not taking enough risk. But during risk-off periods, many people would say, well, concentrating your portfolio during a risk-off period, that's risky. And we're saying, no, it's not. We're basically telling you we think we're not right in roughly 22 stocks, that our confidence isn't high enough. We're willing to let it go. And we do, like all of our stocks in the portfolio at any given time. But it is during the risk-off moments that we are very truthful to one another and say, yeah, this could become a problem, and I probably haven't cut my scoring enough to reflect it.
Wood has earned the risk-taker status in the investment world for her unconventional ideas and love for disruptive innovations. She is also now the first expert to predict that Bitcoin will hit $1 million within the next decade or less. We can already see a massive influx of institutional investors and large multinational corporations into the space. As Wood explains, attaining legal tender status in multiple countries will also increase the assets rate of adoption. Put together, all these factors will easily send Bitcoin into the six figures and beyond. What do you think about Cathie Wood's interview? Don't forget to drop your comments below and give the video a thumbs up. You'd also subscribe to the channel and turn on post notifications so you never miss any of our videos. Thanks for watching.